Well, good afternoon, good morning, good evening, wherever you guys are calling in or listening in from. Um, Thank you so much, Anka and David, for hosting this wonderful event. Um, my goal here today is to just share some of the things that are working for us. And when I mean us, I mean myself and our clients. Just wanted to kind of share with the hopes that maybe this would help you too as well in your trading. One of the things that we were both proud of is in 2019, 2020, I should say, even with the pandemic and how everything was up, down, and sideways, volatility and all, we were able to do really, really well in 2020. And I know some people did really well, but we were one of those people that did so too. And what I want to talk about is something that we did very, very consistently in 2020, even in the face of riots in Capitol Hills, elections, volatility in the elections, the pandemic, business being shut down, and so on and so forth. This was something that really helped us get through all of that. And we started the year prior to even knowing that there was going to be a pandemic. We started the year with a goal of having about 5 stocks per month that will reach all-time highs. And at the end of the year, we did about, to be exact, about 98 stocks that we did. And so today I wanted to kind of show you just some of the things that went into our process of doing that. And again, hopefully you guys can learn something from this, and then we'll go forward from there. But before I do so, as always, this is not investment advice. So please be aware of that. We are not licensed financial advisors at all. We're just regular people who figure out how to see things in the market, and it's just sharing it with other people. So please, before you do anything, make sure that you do your own due diligence. Okay. All right. Um, let's see here. I need to make sure that I can have the chat box up and open. Let's see. I'm not sure if I'm doing this correctly. Well, there you go. All right. Excellent. Hello. Oh, by the way, is there anybody on the call that's actually heard me speak before? It'd be good to just recognize people who might have heard me speak before in the past, seen my presentation. All right. And if there's anybody that's never heard me speak before, that's fine too. Hey, Lynn. All right. Well, you got some new people that have never seen me speak before. Okay, good. No worries. No worries. All right. So just a little bit about me and what I've done. Been in the accounting industry, finance industry, the investing industry for about 17 years. I studied accounting in college. Okay. Yay, Profit Club. Hey, I've seen that name before, but I don't know who it is. I just know that I've seen that Profit Club name before. So welcome. But yeah, 17 years, studied accounting in college. Long story short, not the pandemic, but the financial crisis got the best of me. I lost everything during the financial crisis, and I decided that I needed to do something better. One of the biggest things that affected me during that financial crisis was that I knew nothing about the stock market. Even though I understood how to read financial statements, I knew nothing about the stock market. Long story short, I vowed to myself never to let another market collapse affect me because I lost my job and everything. I said I will not let that affect me again. I needed to understand how the stock market worked. And so it took me to about 2020, 2012 to really start digging into the stock market. I placed my first trade on November 26, 2012. The very first one, I traded options on Nike. That's what I did. But there was a lot of work that went into that first trade. Now, at that point in time, that option trade did really well. I was super excited. I just knew that this was going to be the beginning of my career, and it was. But what I did not expect is the bumps that were going to come along the way. And that took me about, I want to say, from 2012 to 2016, about right, really about 2014, 2015 was a learning experience. I blew my account 3 times during that process. And then I sat down and I said, look, it can't be this complicated. It's got to be easier than this. And what is it that I'm missing? And by 2016, I developed a formula that I'm using till today. Okay. But prior to being in the market, one of the things I did was I did financial statement analysis for a merger and acquisition firm that I worked with. And I was the guy that would analyze the financial statements of companies that we're looking to acquire or merge with and make sure that they were good companies and what the strengths were, the weakness were from the financial statement point of view, which is kind of like the fundamental analysis aspect. Okay. And then I decided to apply that to the stock market. And since then, what we do now is we specialize in making sure we identify companies, sound companies, all right? We don't day trade, so I apologize to anybody who's a day trader on here. We are not day traders, okay? We are more swing traders and long-term investors, with the emphasis of long-term investing more than anything else. But I think some of the things I'll share with you guys today will still help you even with swing trading, okay? But that's what we do. We try to focus on companies that are good, healthy stocks, but the key is to find them at low attractive prices. And we want to make sure that our risk is minimized in the process and that they have good potential for profits. If you understand that concept and you know how to see that in the market, then investing in the stock market is really not that complicated. Okay. So what we do is we have a terminology called PAT. Our goal is to find stocks that are at what we call pre-all-time highs. Okay. A lot of times there's a quote that I like to say that people get excited about stocks that have made huge runs, but the true credit, in my opinion, goes to those who were able to train their eyes to see the setup ahead of time. Okay. And one of the things that is what I see when I see the media is it's very common, super common to talk about the stocks that have already made the big moves, right? And you hear comments like, oh man, how did I miss that? Or, oh my gosh, is it too late to still jump into this stock? You know, sometimes I watch, stations, channels on TV, and you hear people calling in and say, is it too late to jump into this stock? Is it too early to jump into this stock? You know, this stock is on fire right now. What do you think? Should I sell now? Should I not? Right? But the whole idea is we just focus on identifying certain stocks that haven't made all-time highs yet, but have a very good chance of making all-time highs. Okay. And that's what we did. And so in 2020, these are some of the stocks that we traded in 2020. Some of them don't even exist anymore, like Dunkin' Donuts. I remember that was a really good time when we started buying Dunkin' Donuts shares because we saw the same pattern and said, hey, this is a stock that could make it to all-time highs. And I remember when we were recommending it to all our clients, uh, and we actually bought it ourselves too. I remember I would drive to Dunkin' Donuts every morning, and it was kind of fun because it's like, wow, I know what's about to happen to the shares of this company right here. And every time I bought something, I felt like I was reinvesting back into my own company because, after all, as a shareholder, you're a co-owner of that company. And so it was pretty cool. And then it got bought out, which is fine with us. Okay. Um, but nevertheless, it did what we expected it to do. And so we have a saying in our company, and what we teach our clients is that there's no such thing as hoping when it comes to the stock market. We don't hope, we don't wish, we don't think, nor do we feel. You know, you hear people say, I feel like this is going to happen, or I think this is going to happen. And it's like, when I hear stuff like that, I say, wow, this is somebody that's not really sure about what they're doing. Okay. What I say is, what do you know? You know, we know certain things, we see certain data, and that's what we go by. We see certain data. When we see those data, we know what that data is telling us. And then once we know what that data is telling us, we expect it to do that. So much so that if something goes wrong along the way, we can see that ahead of time and say, wait a second, that is not supposed to be happening. Something is going wrong. Okay. And that's what we do here. That's what we do here. And so let me take you guys back, because this whole concept of understanding that, wait a second, you can see certain things in the market came from a guy named Jim Simons. I don't know how many people have ever heard of this guy before. If you've heard about him, you know exactly what I'm talking about. But if you haven't heard about Jim Simons is a quant analysis, okay? And if you've never heard of that term, quant analysis is just basically looking at mathematical data and statistical data and finding patterns in those mathematical and statistics data, and then using that to identify which stocks are going to go up, down, sideways, whatever it might be. But Jim Simons was one of the first people that really started using this and creating computers and algorithms and stuff like that to really take advantage of the market. And he was able to, I think he started like in the 1970s, and then in the 1980s he started his hedge fund. I mean, one of the greatest runs out there. Okay, but very few people hear about Jim Simons. And one of the things that I liked when I learned about him was he says, don't get caught up in intuition, which is so mind blowing for me because that's that feeling of, should I get into this stock? Is it too late? When should I buy it? Or I think, and this is why I said we don't think or hope or feel. It's like those are all intuition. What he said was make sure you have a proven model that you can follow. Okay. And then he went on and said that the stock market is not random. That to me was the defining point somewhere around 2015, 2016 when I heard that the stock market is not random. It's actually filled with patterns. But he said people just can't see these patterns. And the only thing that he did different was once he realized that there's patterns all over the place, because he has a mathematical background, he hired a bunch of scientists and PhD and physicists and mathematicians and statisticians. And he hired a bunch of them, right, to all work on creating models that will find certain patterns in the market. And that's all they did. They did no fundamental analysis. They didn't even do technical analysis, to my knowledge. It was just using mathematical, statistical, historical data to identify certain patterns. But the unique thing about what they were able to do was they took this statistical data and these patterns, and they were able to find it much, much faster, much, much quicker than the human eye will be able to do. But that right there laid a foundation for me to say, wow, if Jim is saying that this exists out there, even if I don't capture everything that he captures out there, what type of patterns exist in the market that I, even with my own naked eye, would be able to see? And that's what started my whole research and my journey into developing this path strategy that I talk about here. But I really love what he said about patterns exist and it's not random. Okay, they might look like they're random, but they're not. And all they do is they look for data that is not random. That's really interesting. So that means that he's looking for repeatable patterns, which I thought, wow, that was so crazy because before that, I heard, oh, the stock market is just gambling. The stock market is just luck. You don't know which is going to happen. But he's saying, no, the opposite. It's like, actually, anything that we cannot find that has a repeatable pattern, we don't want that. We only want things that have repeatable pattern. And so it made me start thinking, why is it that we don't know what these repeatable patterns are? Or is it that we know it, we're just not aware of it, right? And that brings me to this little exercise I would like you guys to participate in. And if you can, just type in the answer to this. Okay, I appreciate it if everybody can do so. How many corners does a stop sign have? Now, Profit Club, you probably heard me say this before, so you feel free to answer if you want to, but you don't have to, okay? But how many people know how many stops, how many corners, I should say, does a stop sign have? Does anybody know how many corners a stop sign has? Okay, so I'm getting the very typical answer I usually get, and it's always tossed up between two numbers, between 6 and 8, right? Those are the two numbers that we always see people talking about. But the true answer is it's actually 8. Now, let me ask you guys this question. You don't remember because it's American stop. Now, let me ask you this question. What about the color? What color is a stop sign? You'd be surprised how many people get that wrong. Exactly. Thank you very much. Red. To be specific, red and white. Okay. So that is what, but it's interesting that we see stop signs every single day if we go out driving. We see it all the time. But even till today, those who said 6, it's like, it's not that it wasn't there, But for some reason, we just didn't pay close attention to it. Does that make sense? It's no different from the market. The patterns are there. It's like staring us in the face. We're just not aware of it, or we dismiss it, we overlook it, right? As, oh, it's not that big of a deal. Okay. Now, what about a yield sign? How many corners does a yield sign have? Does anybody know? How many corners does a yield sign have? Three. Excellent. Very good. Most people know that one. And let me ask you guys this. What color is a yield sign? What color is a yield sign? Yellow. Yellow. I'm seeing yellow. And that is incorrect, ladies and gentlemen. The yield sign has not been yellow since 1972. This is one that I see almost everybody get wrong, right? Since 1970, I see what you're saying there, Lynn. Okay. And I tell people, I say, okay, if anybody who was born after 1972 and gets this answer wrong, wow, remind me never to drive with you when we go out, whenever I meet you. Okay. If we ever meet, just let you know, like if we ever meet, just hand over the keys. Because I'm like, look, if you thought since 1972 and you thought the yield sign was yellow, then you haven't been paying attention to the road. So just go ahead and hand over the keys to me and I'll do the driving. Right. But no, seriously, for those born before 1972 that was driving, especially before 1972, I can understand. At one point in time, it was yellow and black. But ladies and gentlemen, 1972 is how many years ago? Almost 50 years ago. Literally almost 50 years ago. And we don't realize that. It's already changed. And so again, the stock market is honestly not that different. I've seen people who've been in the stock market for 40 years, 20 years, 50 years, however many years it has been, and they are not seeing certain patterns that repeats over and over and over. Okay. Let me give you an example. Um, we have in a model that we created, we have 7 things that we look for. Okay. We want to make sure that there are patterns that we can see that tells us the stock is healthy, it's growing, and it's healthy. We want to know that the price is attractive because I hear this all the time. Even I used to think the same thing. Well, how do I know if the price is low enough? Am I buying cheap or is it too expensive? Should I wait for a pullback? Right? If you've ever asked that question, I'm with you. Then the other aspect is how do we mitigate our risk? What is mitigating our risk? And do we even have enough profit potential? Do we even know? This is one that blew my mind. I tell people all the time, one of the things we teach our students and our clients is you ought to know how much money you're going to make from the stock market before each quarter begins. Like that's literally one of the things we train people who join us to do. Like right now, what is your first quarter goal, profit goal? And how attainable is that? Okay. Most people don't even have a goal when they start, which I think is so interesting because we are in the stock market. We are literally in what we call the earning seasons right now. And all these stocks that we trade are reporting earnings right now. They are reporting what they did last quarter. And then some of them are going to project what they're going to do next quarter and the rest of the year. But I see a lot of traders come into the market and have no idea. They can't even tell you what they did the last quarter, not to talk about projecting what they're going to do in the second quarter. And if I was to tell you right now, based on certain data in the market, you can literally project how much money you can make in the second quarter. And we're not even in the second quarter yet, but you can project how much you're going to make in the second quarter. And then just like all these companies, when they report their earnings, did they meet expectation? Did they miss expectation? Or did they beat expectation? And then based off of all that, the stock will go up, the stock will go down. But do you realize that we as investors can do the same thing too? And I've yet to meet people say, I know exactly what I'm going to make next quarter. Okay. And that's one of the things that we try to help people do. So our whole goal is to understand stocks that are healthy. We want to make sure we're getting in at good, attractive prices. How do we make sure that the risk is mitigated so we don't deal with volatility and all this kind of stuff? How do we project into the future, 1 month, 2 months, 3 months?
maybe even 6 months in the future, where we expect our portfolio to be? Are there institutional buyers there? Again, is it offered at a discounted rate? And is there a real good trend? Because we don't want stocks that are going to go sideways, right? Is there a trend that's really there? And that's kind of like what we do. And so we created a whole model based on these seven ideologies or seven patterns that we could see in the market. Okay. And that's where this whole pre all time highs comes from. And so we have something that we call the HARP model. Okay. I'm not going to go into the whole detail of the HARP, but basically taking that first four elements: healthy growth, attractive prices, mitigating risk, profit potential. How can we see all that stuff? And I want you guys to remember this terminology, HARP, because one of the things we tell people is there's a story about a king who used to be tormented by an evil spirit. And he would have this young boy play the harp every time he felt tormented. And that's one of the things I tell people. I say, people are tormented by this stock market. When should we buy? When should we not buy? Should we be selling now? Is it too late? Oh my gosh, I sold too early. If only I had known to hold on longer. Oh my gosh, I missed out on this stock. I don't know if I should get back in again, right? And we feel all this. Oh my gosh, I held on to this stock too long. And people are always panicking. I heard this person make this with money. Should I go jump into this now? And I feel like people are tormented. But what we did was we found that, wow, if you play the harp, and I want you guys to remember this acronym, we play the harp just like that little boy played the harp for the king to kind of like, calm him down. This is literally what we have done. And so throughout the whole 2020, with the pandemic, all that stuff, we were able to navigate this market, meet our expectation, and surpass the expectation, even with the pandemic. Okay. So what I'm going to do here is I'm just going to show you just one element, just one, ladies and gentlemen. It's just one aspect. Okay. One element of how you can tell if a stock is healthy or not. Okay. Now, it's very simple. It's so simple, a 6-year-old can even do it. But again, just like that yield sign, we don't pay attention to it. In my studies of accounting, right, when I would analyze all these financial statements, it would take me, when I first started, because I wanted to be so thorough and everything, it'll take me about a week, to make sure I double check it, all that kind of stuff. I'm analyzing all the financials. Sometimes, depending on how busy I was, it could take me 2 weeks just to analyze the company, right? And then get my report back to the firm that I was working for, right? But it would take me about roughly, the fastest took me about maybe 3 days. The longest took me about 2 weeks. But 3 days to 2 weeks it would take me to find out what is going on with a stock. And then when I came to the market and I started trying to apply, I said, how can I tell? There was something very unique that I found. And let me show you guys what this looks like. I realized, let me bring over a chart here. I'm just going to do this real quick. I realized that over a 10-year period, because one of the things we wanted to do was look back in time, right? Historical data. I realized that all the healthy companies, good, healthy companies, that I would have spent 3 days to 3 weeks analyzing, only to come back and say, yep, this is a really good company. It's an okay company to buy. They all displayed one element in the chart, and that is they went up in price, just like this. Now, remember that yield sign. We see this all the time, but not too often do we know, wait a second, this is a healthy stock. Now, some people might say, oh, that's so simple. Even my 6-year-old can do this. She can come and she say, Daddy, that's a healthy stock. That's a good company. We can go through multiple, but literally what took me 3 days to 3 weeks, you guys can now, if you pay attention to this, can see what that's a healthy company in literally seconds. Let's put this to the test. Give me any stock that you guys might have. I'll throw some out there too. And we just can look at this and see. So for instance, Apple. Is Apple a healthy stock? Everybody says it is. Well, let's double check that. Let's not guess. Look at what's happening here. Healthy. And what we want to see, ladies and gentlemen, is we want to see that over a 10-year period, now this is just a rough ballpark, right? Over a 10-year period, that this stock has been trending higher. Are they going to have up and downs along the way? Yes, they are. But over a 10-year period, are they trending higher or are they trending lower? Okay. Somebody asked about GME, GameStop. Okay. See, a stock like this, let's take away what happened this last 2 days. This is, I mean, 2 months, I should say. Before all this started happening, all right, I just want to show you guys this. Let's just take this away for this. This is what GME looked like. Now, people's like, oh my gosh, well, how would you been able to capture that big move up there? That's for another day. But right now, prior to all this happening, because we know this was an unprecedented event, this is a short squeeze event. That's the reason why these stocks were doing what? They were unhealthy. And just as much as it went up, I knew, look, it's not going to last. Why? Because GME in and of itself is not a healthy stock. Yes, the short squeezer took advantage of it for a short period of time, and that was all it was. They just took advantage of it for a short period of time. But net, this was not, and is still not, a healthy company, pure and simple. Okay. Now, did some people make money off of it? Yes, they did. Nothing wrong with that. But like I said, remember, what we were focusing on is healthy companies that we can buy, sit back, and not have to worry about all the craziness, not get ourselves crazy. So if you were to come approach me about GameStop, which we never traded, by the way, our clients did not trade GameStop because it's not the type of stocks that we invest in. We're the came out and said, I can go back and look at the financial statements and I can spend a week, I can spend 2 weeks, I can spend 3 weeks only to come back and say, it's not a healthy company. Okay. It's not a healthy company. Anybody ever heard of a company called GoPro? Right? GoPro was a company that made cameras. I want you guys to pay attention, right? They made cameras, they were endorsing all kinds of celebrities. All you had to ask yourself, is it a healthy company or not? Now, let's see whether you guys can tell whether it's a healthy company or not. This is what GoPro looks like. When you look at something like this, is this a healthy company or not? Interesting, right? Well, at the same time, people were talking about companies like um, um, Groupon. Let me see Groupon right here. Up, so Groupon. Let's go here. There you go. Groupon, healthy company, unhealthy company. We can see very clearly that this is unhealthy. So, ladies and gentlemen, again, this is just one little tip to just kind of say, hey, are we dealing with a healthy company or not? Tesla. All right, let's go to Tesla. Let's take a look at Tesla. Now, prior to all this move beginning, if we just zoomed into Tesla during this period of time, prior to this big move starting, okay, what can we see? Tesla was a healthy company to the extent that, look, what was it doing? Going higher, right? And so at the end of the day, it's just a very quick, simple way that we can just look and assess, hey, what's going on with some of these companies? All right. What companies are out there? Bank of America, here's what Bank of America is doing, right? If I looked at Bank of America, I said, wow, without doing anything else, in seconds, ladies and gentlemen, I can say, wow, Bank of America is a healthy company. We need to be in this. Okay. And this is all we do. It's as simple as that. It's just one of the many patterns out there. Does that make sense? I'm not saying it's the only thing, but all we simply did was say, look, what if we just focus on the ones that we can see very clearly, just like we can see a stop sign or a yield sign? Okay, now that we are aware of it, now before that we were not aware of it, but now that we're aware of it, what if that's all we did? We can see things and we can see them stuff. And so our goal now is to just make sure that we buy it at this low entry price somewhere around there. Okay. And that's where the rest of our model comes in. But if if you just see this little, hey, wait a second, it's so simple to understand a healthy company from an unhealthy company. If that makes so much sense, or just like, wow, okay, I get that, I can easily do that, then everything else that we built was literally created so that even a 6-year old could analyze the market without knowing any other thing apart from just the data they see. Because as a little kid, they don't know who's a president or who's not. They don't know what the pandemic is doing or what kind of, laws the feds are putting into place and all that kind of stuff. But based on what Jim Simon said, there are patterns. And the key thing was he said, we don't want anything that doesn't have a pattern. And all we did was just pick one and just say, hey. And so part of our whole pre all-time high strategy is to find stocks somewhere down here that can make it to all-time highs. That's it. It's as simple as that. Okay. It's just literally just as simple as that. And so that's what we pretty much did. And what you see here is companies like this, um, Restoration Hardware. pre all-time highs. Our goal was to make it to all-time highs. Boom. It not only hit all-time highs, but it went beyond that. We had this company. Again, this is all during the pandemic, right? Or shortly right after the pandemic bottom. Pre all-time highs, hit all-time highs, right? Moderna, that everybody talks about, even till today. This is the weekly chart of Moderna. Pre all-time highs, expected to make all-time highs. The same pattern over and over and over again. BioLife Solutions, same thing. Pre all-time highs, all-time highs. Tesla, we did this multiple times. Okay. Now the interesting thing is the bigger the time frame, the simpler it becomes. I kid you not. The bigger the time frame, the simpler it becomes. And some of these we can buy this and say, okay, yeah, we know exactly how much money we're gonna make over the next 3, 4, 5, 6, 7, 10 months because of this. All right. And so what we did was we simply took all that information and said, like, wow, how do we make sure that during that same process, while it's going up, what if it runs into problems? What if something happens along the way? How do we know? Should we be getting out or should we not be getting out? And all this other stuff that I told you guys about, where we want to make sure that we are buying at healthy prices, attractive prices, mitigating our risk. Are there institutions involved? All that stuff is what we then put into our platform that we called the right side platform. Now, we call ourselves right side because, again, we can look at a chart and everything to the left hand side of this chart is history. The goal is to try to figure out what's happening here and what's going to take place over here. That's the right side of the chart, right? And so after factoring all these statistical, mathematical, historical data that shows the same pattern over and over again, we said, okay, these are patterns that shows it's going to continue going higher. These are patterns that evolve when they start running into problems, all that kind of stuff. We put that all together in this platform that we have called the Right Side Platform. And rather than trying to make it super complicated, honestly, we just tried to do something very simple. That again, I wanted my 6-year-old daughter, I have a 6-year-old daughter who understands how to trade the market, by the way. I wanted her to be able to say, I can go out there and make money in the stock market. And we actually do that right now. So every time they want to go to a store, we tell them to say, hey, go take a look at, is that stock in the stock market? If it is, go take a look at the chart. Tell me what the chart is doing. If you get the answer right, and and it's a healthy company that's going up, we'll go buy this. We'll go buy something there. Otherwise, we'll just have to wait and see. And that's literally so they know that now. I have a 6-year-old daughter and a 9-year-old son, and they know that till today. Okay, but what we did was say, okay, once we understand that everything is patterns, then the only thing we wanted to do is in that harp that I told you guys about, the R is about minimizing risk. And the way we do it is we dig in a little bit further. There was 4 things that we wanted to know. We want to know if the stock is really ready to go higher or not. We want to know, are there institutions involved in it? Is the stock being offered at a discounted rate right now? And what extra proof do we have that, wow, other things are confirming that, yes, this trend truly is ready to begin? Because again, we do not want to find stocks that are not going anywhere. And so we call this the right model right here. And it makes sense because one of the things you will hear me say over and over is the stock playing the harp, because we want to make sure it plays the harp, but is it also ripe? And just think about a fruit. Nobody wants to eat a fruit that is not ripe. And so when it comes to stock, we do not want to trade a stock unless we know it is ripe. And so in all this mathematical, statistical, quantitative data that we put together, it all comes down to one thing. And we come over here. So this is when we were recommended. Should we be buying this? Should we not? What I want you guys to see is what the right model is saying, right? So we can come over here and look at what it says right there. It says buy cover. So what that is telling us is like, look, if you want to go long, you buy. But if you shorten the stock, you want to cover it. But once you're in, literally, whatever time frame you got in on, whether in this case, this was a monthly chart, you just wait and see what it says the next month. We don't panic. We don't hope. We don't wish, right? Because we know that one, we've analyzed and we picked the right type of stocks that we expected to do certain things over a period of time. The only problem now is if something goes wrong along the way, let us know. Okay. And so because of that, we can literally wait each time frame later, whether it's a monthly chart, weekly chart, daily chart. Just wait the next day, wait the next week, and then wait the next month, and then just come back and say, what does the right model tell us? Okay, you don't have to worry about all the fancy stuff because it's all being done with algorithms behind the screen. It's analyzing all this data, and it just tells you to hold and wait. When it says wait or hold, wait just means if you're not in this trade, go find something else. Okay, wait to see maybe it will pull back. But part of that is maybe it's saying, look, you're not buying this at the best discounted price anymore. Okay, and the reason why it says hold is, let's say you already own the stock, but you wonder, should I sell? Is it time to sell? I've made some good profit. I don't want to lose all this profit. It's like, look, just hold on to your positions. It is not telling you to get out just yet. The next month, nothing. The next month, nothing. Notice how we had this red candle. People would have been panicking. Oh my gosh, I got to sell everything, right? But at the end of the month, I said, no, just hold on to it. Hold on to it, because even though it's a red, this is part of the repeatable pattern that occurs during an uptrend, but it's not one of those that is signaling a reversal. And so in this case, it's like, just hold on and wait and wait on your positions, and then you will be rewarded the next month by saying that you should hold and wait, and then hold and wait, and hold and wait, and hold and wait. Now look at this, guys. Since we started getting in back here in May, June, here's a stock that's just been going higher and higher. Some people like, you know, and again, it's not about guessing. It's not about hoping or wishing or feeling. It's not a feel. It's data, ladies and gentlemen. Data that suggests. Now, we see repeatable patterns that suggest that this is still going higher. We don't see any patterns that saying that it's going lower. Yeah, it's a dip, but that's part of the repeatable pattern. You are going to encounter dips along the way. Matter of fact, you are going to encounter volatility along the way, but it factors all that in and say, well, is this normal volatility or is this excessive volatility? So that way, it's like, wait a second. If it's normal volatility, oh, that's normal. Don't do anything about it. What has the historical data shown us about this normal volatility? Oh, based on this normal volatility, it'll bounce back up. Just hold on to your positions. And we take all that guessing away. And I say, as long as you can read words, and just a few words, like my daughter can read, wait or hold. What should I do? You wait or hold. That's it. And as of today, you will still be in this trade, and it's still making you money. Okay. Here is the one for the other stock that we got. Notice right here, it was kind of like turning. So like this whole section up here that's green just tells you that, look, this is a bullish market. This section right here tells you it's red. It's like a bearish market, you know. But right here was saying, hey, it looks like it's ready to start heading higher. Buy. The next month, buy some more. The next month, buy some more. The pandemic came and it says, yes, it's experiencing volatility, but for this particular stock, it's not out of the ordinary. It's actually in common line with what is already done in the past. So hold on to it. Now, that was during the pandemic, ladies and gentlemen. Then this happened. And I said, okay, you know what? It's getting bad, but not time to get out just yet, which is very interesting. It's like the volatility is increasing at this point in time. It's just like places stop, is what he's saying. And then we talk about how the places stop, which is usually at the low of that candle, or the last two candles is what we usually do. The lowest low of the last two candles. So if we took this candle here and this candle here, these two red candles, we'll say, which one is the lowest of the two? This one? Okay, places stop there. If it goes below that, then something has gone wrong. It's going beyond the normal volatility that we expect from this stock when it's going higher. Okay. And again, how did they figure it out? Just going back and searching data. What is normal for this particular stock? The very next month, it says, look, keep your stops in place, right? So again, you go back, you say, which out of these two now, which the lowest? Well, the lowest are still here. So you still place it. But notice how we didn't get stopped out, even during the pandemic. Do you know how many people would have been panicking by then and selling, selling, selling? But this is saying, you can hold on to it. Now, some people might say, oh, I can't, withstand this type of volatility. That's okay. The cool thing is this is happening on a monthly chart. You can zoom into the weekly chart and it'll tell you what to do. You can zoom into the daily chart and it'll tell you what to do. But right after the pandemic was over, notice what it did. It told you it's time to start buying again. And then wait and hold, wait and hold. And the reason why it's telling you wait and hold is because the way this model is created is we want to get in at discounted prices. And remember what I said in the beginning, the true credit goes to those who can train their eyes to see the setup. Most people like to chase the stock. We're not in the business of chasing stocks. We're in the business of getting stocks at low, attractive prices. But at the same time that we get in low, attractive prices, it doesn't mean we're trying to get into stocks that are like going bankrupt. Okay. Like for instance, when we saw, how many people fell for, I shouldn't say fell for, how many people got into Carnival Cruise Lines and the airlines when the financial market was, I mean, not the financial, the pandemic was happening, right? Be honest. Okay. Like we heard that all over the place and people, like, oh, let me get into the airlines. Let me show you what the airlines was looking like. Okay. And this is a very classic example. This is American Airlines of, this is when the pandemic hit. A lot of people think, oh my goodness, the pandemic ruined airlines. But in actuality, notice what's been happening. It's been struggling way before that. So you guys remember that little test that we just did, just that one element of, is this a healthy company or unhealthy company? Well, airlines were already unhealthy. And I get the point. It's like, well, let me buy at the bottom because I said that's not the type of bottom that we encourage people to buy. We want to buy bottoms of stocks that are going higher. Okay. We don't look for, catching the fallen knife all the way down here. Because notice what has happened since then. I mean, it has done better, but prior to that, it was just literally going nowhere. And when we were telling people now, let's stay away from airline stocks, people couldn't understand. It's like, it's not healthy. It's not a healthy stock. Whatever spike it had, it would give it right back. You don't want stocks like that. What we want is stocks that, hey, when they're ready to go, whatever drop they have is going to go right back up, is what we want. We don't want the opposite. Cruise lines. How many people were in cruise lines thinking, oh my gosh, I know people that are still holding on to their cruise line shares and they've missed out on one of the best market rallies, right? Simply because they said, hey, media told them to buy cruise line. It makes sense, right? Uh-uh, it doesn't because these were already showing that there was weakness in these stocks. And that's what our platform does. It goes back and says, look, I know there's weakness, but is this normal for that stock? Should you stay in? Should you not stay in? Right? What about oil stocks, right? We saw oil stocks like USO. A lot of people was, oh, let's get into oil stocks. And they believe that the pandemic was the one that ruined it. But no, they were struggling. I mean, oil stocks has been struggling. I know people that were holding to oil stocks since 2014 hoping that it's going to come back because why? They tell us, hold on to it, hold on to it, hold on to it. But what keeps on happening? And so why they telling people get into some, airline stocks, get into some cruise line stocks, get into some oil stocks, what they were doing was selling. And it's unfortunate a lot of these YouTubers are coming out there just following whatever they heard and just making their videos. And that was all they were doing. But in actuality, they were all invested in companies that were not really doing that great. And so we say you don't have to take that type of risk. There's information out there, ladies and gentlemen, that would help you prevent that. Here is Moderna. When we first got into Moderna, was somewhere around here when it says buy cover. Notice what the right model is telling us here. Okay. Notice what the right model is telling us when we hover over here. So we started getting into Moderna somewhere around here. It says buy cover. When it went down the next week, this is a weekly chart, it says just hold on to it. Don't sell, don't panic. The very next week, it's okay. It's getting a little volatile than normal. Place some stops, which is very interesting because what it did not say was sell it. It said just place a stop. And then after that, it says keep your stops in place. Look, now it's time to buy more. Is it any surprise that Moderna started going up? Look at what Moderna has been saying recently. Buy more. There are people still wondering, should we not buy Moderna? Okay. They couldn't understand when Moderna said they were delivering all this stuff, the stock went down, but it's part of the normal volatility. And that's what people are not aware of. That's the beauty of what this has done. I am kind of beginning to run out of time. So let me see if I can speed this up just a little bit. Okay. Because even with all that, let me show you guys this. You can run scans now for stocks that we have, and it's saying, look, What about stocks right now that it's saying it's time to buy? It's time to buy them today. Like this platform uses end of day data. Okay. So again, it's not necessarily conducive for day trading, but any type of swing trading, long-term investing, perfect for it. Okay. This is yesterday's scan, literally yesterday's scan. You come over here, you click on buy cover, you come over here, you click on the daily chart. Obviously, if you don't buy a cover, buy means that you're trying to buy a stock, to go higher. You want to pick the bullish version. You click on get results. What it does is then it goes behind the scene and starts searching for all these different types of stocks that are out there. Right now, ladies and gentlemen, on the daily chart, there are 329 different stocks that are all saying, hey, based on historical pattern, these stocks are looking ready to go higher. And that was yesterday. So we still got to go in today and see what's happened. But the peace of mind we have is we don't worry about what's going to happen because we know that each day it will let us know, is this normal? Is it not? Should we be buying more? Should we not be buying more? If you look at Ford, you look at XLE, you look at all these stocks right here, how are they performing today? I mean, this is just literally based off the list. This is the buy cover that you see here. Okay, this is Ford. You see how it says buy cover? When I hover over the very last candle, I'm going to circle this. Let me hover over this last candle right here. Buy cover. That was yesterday. I'm not sure what Ford is doing today, but I'm not worried because even if it has a slight dip or not, I know that this is a stock that is getting ready to do what? Go higher. That's the beauty of that. Okay, this stock right here, XLE, which is the energy sector, same thing. If I come over here, right now it's saying, look, long stop, exit your short positions. This is telling you be ready for something that is about to start heading high because before it was going all the way down. It's like exit your short positions. The fact that it's telling you exit your short positions tells you something is about to happen to this. Okay. Here's another one right here that came up. Another buy cover on GEVO. And this is like a stock that is like not too expensive. Okay. But ladies and gentlemen, this happens over and over and over again. Does that make sense? Over and over and over again. Can you guys hear me? Okay, good. All right. So, anyways, that's what this software does. And I want to encourage you guys, one, nobody has to be afraid of the market. There's too much data, too much information for anybody to, one, be afraid of the market, but two, be scared of it. So what I'm going to do here is just, kind of fast forward. We've been through all this right here. One last thing I want to say is, we have a weekly report that we write every single week where we actually list these pre-all-time highs. We talk about them. We write them in this report. This is the sample of the cruise line airlines, so you can see how even the software is saying, look, this is not healthy. This whole red section right here told you, look, stay away. I mean, you shouldn't be buying anything where it's all red to the downside. Does that make sense? The right side report, because of this type of information, we were able to see back in January 2020, right before the pandemic. We talked about how I want to highlight this section right here. It says, we expect the uptrend that we've had to come to an end. We need to be ready for a slowdown at best or a reversal at worst. The writing is already on the wall. It is time to take profits, exit positions. The market is warning us to take heed. All that simply because repeatable patterns that were beginning to show themselves right before the pandemic. Now, we did not expect it to be as bad as the pandemic was, but it was there. And then when the pandemic ended, if anybody noticed, March 23rd was the low of the pandemic. On March 27th, which was that weekend when we wrote about it, so look, most people are asking, have we found the bottom or is this just a relief rally? And there were many people during that rally, the initial stage of this rally, that were saying, oh, it's a bear market rally. It's a bear market rally. I say, you guys have no idea. This is not a bear market rally. And I said, the answer, the market is communicating that it is time to cover all short positions. Look at this, guys. All short position, cover all short position, exit your shorts and get ready for a rally. And that's kind of like all because of what we were able to see and use using quantitative data. Okay. So I'm going to leave here because I know that I don't have that much time. My platform on a monthly basis is about $2.99 a month. Okay. The offer today is for $97. I want you guys to take a look at it, test it out, see if it works for you. You know, um, I'm also going to include the right side report in this at no additional cost. And the reason why I'm going to include this is because I want you guys to see the stocks that we are picking. Okay, this it's not coincidence that we found 98 different stocks throughout the year. And keep in mind, think about how crazy 2020 was, right? 2020 was a really crazy year. We had the pandemic, we had businesses shut down. I remember when people were crying foul. Oh, it's wrong for the market to be going up when so many people lost their jobs and so many unemployment rate is so high. There were people who would not believe in the rally because of what they saw with unemployment. They saw restaurants being shut down. And I'm saying, guys, you're looking at the wrong data. The data in the charts was showing, wow, markets was ready to move again. Okay. And so all throughout 2020, we did way better than we expected. We planned for 60%, 60 stocks. It did better. It did over 90 stocks, it did like 98 to be exact. And Profit Club, no, this is different from Magenta. Magenta doesn't exist anymore, actually. This is completely different. It's very similar to a certain degree, but the big difference now is it now has our proprietary ripe model in there. Okay. So that now you can use this, and it has the scans as well too, where you can go in there and you can look. If you want to wait on the right side report that I write every single weekend, that's fine. What I tell people is like, look, I do all the work because these are stocks that me myself is looking to invest in. Okay, so I write these reports that here are my top picks. If I don't find anything that week, I'll let you guys know. There's nothing this week that I see. But when I see something, I write that in the right side report. Say, here are my top picks of stocks that are doing really well. And most of the time, you can just go on the software itself, run your own scan, and see something too as well. But then after I said, look, these based on my criteria and what I do and how we take advantage of the market, here are the ones that we like the best. We write about that and we say, look, all you got to do, you don't even need me. You have access to me 24/7 by just going to the software and then just look and see what is saying every day, every week. We have a saying over here: we don't trade every day, we trade every weekend. Okay, that's how simplified we've made this. Okay, because we can find stocks that over the next month, over the next 2 months, over the next 3 months are going to give us the type of return that we're looking for. And then we just say, okay, fine, let's check it every weekend, literally. And I call it a Saturday weekend trading, right? So we go in and we just turn on the computer. We say, what does the software tell us to do? Okay. What does the model tell us to do? If the model comes and the model says, look, here we are today, buy. That's it. There's no, oh, let me analyze this. And it's just one thing, buy. Okay. If we want to buy more, I can buy more today. If it tells us to wait, then it's okay, you know what? I don't have to do anything. I don't have to wait. Well, what about selling? Nope. It told us to wait. That's the data that is looking at. That's the quantitative data it's looking at. It's like there's no need to sell. Okay. And that's kind of like what we do. So every day, every week, every month, we just look for certain stocks. We say, look, this is what we want. And we just buy those. And we just sit back. We check it once a weekend. Some people check it every day for those who want to do daily swing trading. But for me, every week. I liken it to like owning a real estate property and just going back and doing a quick property check on your property every single Saturday. It literally takes us, what, 20 minutes at the most to manage our whole portfolio. We have anywhere from 40 to 60 stocks in the portfolio at any given time. And all that takes 20 minutes every Saturday, and we good. If it tells us to place a stop, we place a stop. If it tells us to get out, we get out. If it tells us to buy more, if we choose to buy more, we buy more. If it tells us to wait and do nothing, we done. Move on. Come back next Saturday, and everything is fine. And that's literally, ladies and gentlemen, how we went through the whole 2020. This year so far, we've already surpassed our goal for the first quarter, and we are just in the beginning of the second month, which is not even halfway through the quarter. We've already surpassed it, blew past our expectations. So when we start reporting our quarterly report at the beginning of next quarter, I'm pretty sure that we will not only nail it, but blow expectations. So I hope this helps you. Okay. Give it a try for $97. Come on in, 30 days, check it out. Okay. I think that you will like what you'll find in there. But the whole thing is we don't guess, we don't hope, We don't wish. We don't have to think, nor do we have to have this kind of feeling. It's not about that. It's about data. And the beauty of having a software do it is it's there's no emotions involved. Okay. And that's how we were able to do wonderfully well in 2020. My time is up. Unfortunately, I cannot take any questions, but by all means, go on there. If you go to this link, there's three different options you can actually choose from. It's not just the 97. There's three different options you can choose from. So go check out that link and see the different options that might benefit you the most. David, Anka, thank you so much for having us on your call. Great presentation, great event that you guys have put together. Really, really appreciate it.